Greetings, everybody. It is Saturday afternoon, March 7th, 2015 at this end. Welcome to this week's edition of the Weekend Trader. I am in full weekend garb mode, trying to stay warm on what continues to be a rather Arctic winter here in the Northeast. Many of you know that I live on Cape Cod, which sticks out into the ocean on the coast of Massachusetts, and we typically get much more moderate winters than what we're getting this year. It has been a very unusual winter. We have not been above freezing, maybe except for one afternoon over the last month. Rumor has it we're going to break that resistance zone on Tuesday. So anyway, again, welcome. I mentioned in a couple of tweets on Friday that I would discuss some of the banter we had via the video today. And again, if you haven't noticed as well, I'm trying to focus on quality versus quantity of tweets. So I'm not tweeting a whole lot during the trading day, nor should you be watching it. You should be focused on trading or whatever business craft that you are engaged in. I tend to tweet a little bit more on Friday. For some reason, the market just seems to be moving in much slower motion, much better pace where I can actually get some thoughts across. And as I said in the Trading After Dark video series a few years ago, I'm not intending to teach via tweets. You can't learn any craft. You can't learn to be a surgeon or a pilot or a professional golfer via social media. It just ain't going to cut it. You need years of experience, years of training, formal training, on-the-job training, apprenticeships. That's how you learn this business, hard knocks. But we can certainly get points across. And my kudos to those in the industry. And I mentioned some of these names in the past, that you can kind of separate the wheat from the chaff. I'll take myself completely out of this picture. Find a group of like-minded traders, study what they do, and do that after hours to the extent that you can, and then internalize that, and then certainly take that salt that's provided and put it on the meat of training, the meat of experience. Right? That's what's going to make this work for you over the long run. We're providing some salt. We're providing some seasoning, some validation, perhaps. That's the intent, at least, of my comments when I'm tweeting, if you will. So again, I want to go back to Friday afternoon, because one of the things that I talk about a lot when I speak publicly and in my training sessions is I talk about this. It's going to sound like an oxymoron, two terms that shouldn't relate to one another, but I'm going to use it anyway. I call it acquired instinct. It's an instinct. It's a feel for the market that you acquire over time, so that through the fires that you are through and the successes that you are through, that you are being hardened, that you are being sharpened, and you are being put into a place where you can act as much on intuition, instinct, as much as anything else. And what happens over time is that you find yourself going to the technicals or whatever you used to look at as more confirmation than trigger. Okay, the first jelly trading team we did several years ago, we worked with an NFL quarterback. And if you recall, we got people from all walks of life: professional tennis player, professional quarterback, floor traders. We had the whole gamut, real estate investors, and the idea was to get a cross mix of society. And what we did, or one of the biggest takeaways that I got from that effort, was from our quarterback. And he tells the story of that when he went from college to the pros, that he was being tutored with his new team by a very seasoned quarterback who had played for years. And what happened was that when the seasoned quarterback was observing the guy who just came up from school, who the guy was in our program, he basically said, I'm watching you. You get your technicals really good. You take the ball, you drop back, and you've got your reads. You've got your progression of reads. You want to throw it out to the flat. On the left, he's covered. You look over the middle, he's covered. Number 3, maybe the guy is deep, or maybe that was your first option. And that's not a viable solution. And then ultimately you go to your 4th read, which is a dumb out to the right, and you do it great, wonderful. He says, but where you have to get to a point where you're taking that snap and you're backing up and you're surveying all of this at once. so that right away you step back, you survey the field, and you know you're going to go over here. You know you're going to go over here. And that's where I think the Mannings and the Bradys and any strong quarterback, and yes, I do have my hat on. That cost me a little bit. But, that's why these people are as successful as they are, and that's why we talk a lot about the 5% or less of the trading world that are consistently successful. That's what separates. You have the 10,000 hours. You have the hours and the days and the years of experience that we've talked about before. Malcolm Gladwell talks about in his book Outliers. You have that time that you've invested. But ultimately, what you're able to do is you're able to dissect everything and boil it down, assimilate it on a very quick basis. So, what's happening on Friday? What's happening on Friday? Was it some technicals that were the issue? Was it, a trend day down, which is great to see after the fact? What's happening here? And if I go back to my sequence on Friday, I really wasn't commenting on anything until it got to the point of, my goodness, this is just so stinking obvious. And so I tweeted at some point down here, if I can find it, my first tweet on Friday, ES error alert, 17 points on 30, 10 points on 15, 20 points on 60. Trading the afternoon sequence MATD like morning after trend day, but just early because it's afternoon after morning trend type of thing. So you're getting your oscillations. Squeeze possible to fill air. Okay. So what's happening here? The market is oversold. I mean, the market's oversold. You can measure that by so many things. You can measure that by continual tick readings that are hovering below zero all day long. You saw several pushes down to negative 1,000 or greater. Any of the internals you're looking at looked horrendous. So that's going to get you somewhere. But once you get somewhere, all we care about is what's going to happen afterward. So what's happening? You've got so much air, visual air. That's what I call it, and it's on the Jelly Speak tab of the website. Visual air separating where price is right now, where price is extremely discounted versus some logical area of what I'll call resistance or support for the short trend. Okay, resistance to the long side, support in the short side. You volume profile folks are going to say, you're in a low volume node. Right, you're trading down there. Typically, what's the play? It plays to take it back toward where volume was active. It's the same concept, but described differently. And so it's interesting when I read and watch you guys that trade with market profile. It just validates everything that I see with a different tool. Again, I'm using a yardstick. You folks are using a tape measure. It's the same thing. And one of the things that I try to get traders to focus on is don't get so caught up in the complexities. Whether you're using charts with momentum indicators and price indicators and moving averages, or whether you're using volume profile, market profile, if you're using some combination. The key is you can't take them so literally. They are all contextual. But don't get yourself thinking so much or wondering or asking so much about context. What is this context? Early in your career, maybe you have to go through that cycle, but ultimately you have to get to a point where that's look at it. I mean, it is what it is. And you're taking the ball, you're dropping back, you're looking the field, and you've got four guys open, right? And that's what this business is about, and that's what Friday was about. So, lots of air, and then very shortly after I posted that, I said buy stops possible of 73 for air fill. What was happening there? The market was coiling. It had pushed down. It could go down no further. It could go down no further at that point. Okay, so you're surveying the field. Very simple price bar analysis, right? You know that over 73, do you want to be short? Does anybody who's short below 73, once that crosses above 73, based on the bar charts, was there any reason for them to be short? Because they're going to be in the hole the further the moment it crossed up, and they were just going to have to cover. Okay, they just had to. There's no probability on this one. They had to. So what happened? 73 busts up, market trades up towards 77. Okay. Now, do I have a crystal ball? No. Do I have? Do I make mistakes? Of course I do. Read my book. Okay. But I've said before, when they're handing out free donuts, you grab one. Okay. And I commented a little bit after this. I said, KISS, keep it simple. Air filling. All you need is a brain of a 5-year-old. Hope you played along. And then tip the ES dealer for the pocket aces, air fill gimme. And my point in this, because we've only got so many characters to tweet, is very simple, very succinct, and very, very pointed. The fact is that don't overcomplicate this business, okay? And that's one of the reasons that I like using, again, give me 2 charts with 2 time frames and an order entry system, and I guarantee you I will make money. I guarantee you that. I've done this before. I've done this for years, but I still see why there's so many people that struggle with this. 95%, right, roughly, the percent of failure in this industry. And by and large, and I work with so many traders over the years, it comes down to people trying to overthink, overcomplicate. And you see this in social media like crazy. You see people trying to show how smart they are. Okay? Look, I consider myself to be a fairly smart guy. Okay? I've got a bachelor's degree in accounting. I'm a certified management accountant. I have an executive MBA. I run corporations. I'm a pretty smart guy, right? But when I trade best in this business, it's when I dumb it down. Okay? I've said before, I want a trader who can count to 3 and be aggressive, and that's it. I want that person over someone who wants to show himself and others how smart he or she may be. And I'm getting animated here because I feel so strongly about it, and it still bothers me so much. And you can see me kind of getting irked with social media because again, I believe that this is a great tool. As I was getting ready to do this, Peter Resnicek, and Peter, I hope I'm saying your name right. Forgive me if I'm not. Was posting an outstanding video about the same time frame yesterday. He was getting in on low volume activity. The market was stretched. He got in on the way down, which, by the way, I often do. He posted later that we trade a little bit differently, and that's certainly true at times. But how he traded was exactly how I traded that same sequence, except I added when I got the confirmation and then moved back up, and I was able to get more of an outlier on the trade sequence. But we're both looking at the same thing. One's got a tape measure, one's got a yardstick, and you know, so there's some pockets of brilliance out there, but you got to find it, and you got to be careful on how you use it. And you have to be careful how you use my tweets. Okay, I'm still in the future going to be going over quality versus quantity. Okay, I have, like Peter and others, I have multiple businesses that deserve my attention over the day. Trading remains my passion. Trading remains the one that I am the most engaged in over the course of time, and it means a lot to me. And I make more money from that business than any other one. And I have a passion for this, if you can't tell. So you know, when I'm actively trading, if I'm talking about, I said this last week, if I'm talking about it, if I'm typing about it, if you're doing that, you're not focusing on the sequence. Great, you had a great sequence, but could it have been better? Okay, could it have been better? Could you have added on the push? Okay, could you have been more aggressive? And anyway, so this is all that's going through my head. And it's, by the way, the move above 73 was nothing that you wouldn't find in any technical analysis 101, but folks, there are thousands of them out there. I'm not going to belabor that point. Okay, the point is you're consolidating the lower range. It ain't going to go down anymore. It just is not at that point in time. And okay, if it is the 1 out of a million that it does, you take the heat. You take it off. And I love what Peter was saying in his video that initially when he's in the position, you know, he doesn't put a stop in right away. You know, let the market start to do what it's doing. And at that point, you know, the stop essentially is if the day just, you know, becomes 1 out of a million that you know, is going to go down from you know, 2100 to 0 in the next you know, 5 minutes of flash crash, and then it's going to come back up. But what do you do? There's no stop at that point. As the jellies know, my definition of a stop is when the premise changes. What is the premise for the trade? What is the reason you got in the trade? Okay, never, ever, 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 ever go into a trade with a 2-point stop. Never. Okay. Well, Don, it seems like you don't care about risk management. I care a hell of a lot about risk management. I'm going to manage my risk with size. And 2 points. 2 points. Where did you get in the trade? Okay. What if the market's in a tremendous uptrend and it's starting to pull back, or finally broke consolidation to the F side and it came back, and you're 2 points too early? Okay. Right? You stop out on the 2-point plunge right into support, bang. You know, you're out of it when you should have been in or adding or waiting for the confirm to add. You know, what happens in a case like this? You know, market's very volatile. You know, what used to be maybe a 2-point move is now a 5-point move. So 2-point stops. Okay, you know, Is it possible that you're going to get in 2 points early on an air fade? Absolutely, absolutely. So 2 points go. You just got to manage your risk with size and acknowledge that and manage the day as the day. So um, it's um, it's a wonderful business, this world of trading, and it comes down to you certainly having conviction with what you do. Um, in thinking about the person on the other side of the trade. I've said this before. I can count on both hands the number of people who can respond yes to both questions. Do you add to your position when you get confirmation when it moves in your favor? And B, are you always thinking about the person on the other side of that trade? And the second element is where that sequence comes in. What's going to happen after 73? Okay, people that are wanting to get long, that are flat, are going to want to get long. People that are short are going to be in the hold. In the hold, they're going to be in pain. They're going to need to buy. You get two elements of buying pressure on market lows, on low volume, tons of air. What's going to happen? Okay, and this is where I over the years have been able to get myself to a point where I can assimilate this data fairly instantly. And I would encourage you folks in your own trading to work toward getting to that point where you can look at something, you can take the snap, you can back up, you can see the field. I said earlier, it's like Friday sometime move in slow motion. Sometimes the setups, it's like you're standing, and use another sport, you're standing at the plate and they're throwing a grapefruit at you that you can't help but hit. That's what this business is about and where you have to get to. The technicals, fine. They can be a wonderful framework for you. But what you're going to find ultimately is you're going to find that confirming what you see and what you sense and what you feel. It's wonderful when you can use tools like Tweeter. Used to be an old audio company here in New England called Tweeter. You can use a tool like Twitter as after the fact confirmation. Kind of look at it after the market's over and say, yeah, that's exactly what I was seeing live, because that's what's important. That's when you're going to have the conviction. You're going to develop the personal conviction to be able to go in with and be aggressive, not because somebody else told you to do something, but because you saw it, you acted, and that's the muscle memory that you build up over time. So whatever you use, market profile, volume profile, um, price indicators, momentum indicators, just pick one, and just do it, just act. Okay. So a beautiful, beautiful trading day on Friday, not because it was a trend day, but just because the setups were to me a little bit more obvious and clear, and you get some size on. And by the way, I made more money going long than I did short on Friday, and I had a very, very good day. So that's what this business is about. It's not necessarily going for that home run. It's great to say in hindsight, while you're shorting at 90 and holding till 68, yeah, well, that's going to happen one out of 50 times, and you're going to get stopped out and frustrated during all the rest. What you need to do is be able to understand what the market is doing at any given point in time, adapt to it. Okay, it's a bit corny, the jellyfish phrase, but it works and it's true. A jellyfish has to act, has to eat, has to survive off of the current that the market, that the ocean pushes it toward. It has to survive based on where it's at. Okay, traders have to continually adapt to what's happening. All right. And Friday, I saw someone else posted accurately so that Friday either made men or broke men and women. It's about understanding what's happening at any given point in time and evolving yourself to adapt to it. That's why God bless the turtles, but it works in one type of market, a trending market. Not everything is a nail. Okay, if you just have a hammer, that's great. You're going to do okay on occasion. You're going to get frustrated or do nothing during a lot of the other times. That's okay. Okay, but that's it. I want to adapt to the market as it's moving, as it's evolving every single day. It requires you to stay on target. It requires you to be alert, and keeps you engaged in the market. So that's what I've got for this weekend. Hope that helps. Email me at don@donmillereducation.com if you have any questions. Peter, great video. I'll post a link to it. You're doing a great job. I love the mix of education, entertainment, insight, and there are others out there as well. So be well, have a great weekend, and we'll catch you next week. Take care.